for those that don't know about what we announced, and you weren't on the co-founders call, then what we did was explain the enhanced Bizzcareer and the extra packages, the smaller packages, and also the additional strategy which has been added to the 5K accounts, but also the index, which is amazing, and I'll tell you more about that tomorrow. But the index, which has been making tremendous money, we've actually I've made artificial intelligence bot to run on the actual index itself, and we're the only ones in the world who've got that, because it came out of this head, 4 pages of algorithm, which took me a little while to work out, but I did it in the end. And then the software guys have put that into another strategy, which you get on the 500 and the 2000 and the 5000, and that makes so much money. It's unbelievable, even more than the index itself. But we're the only company in the world that have that, because I generated it. So that's in addition to what we've already got. So things are really flying. What we also came out while we're waiting for everybody is, as well as the enhanced Bizzcareer, we brought in a fully regulated MT5 brokerage. So the company now has a regulated MetaTrader 5 brokerage. We also brought out InfiPay. So I think we're the world's first crypto banking platform where you can have your own accounts. You can have a business account. It's very similar to the sort of things that would be given to you by a bank. There's even a loan system in there. But what we also have is, they're not prepaid cards. It's a proper payment processing platform where you can have your own account. You can have a wallet. You can have your fiat currency in there. You can have cryptocurrency in there, and you can pay your bills, everything. It's just like having your normal banking system. So we also introduced InfiPay. You have your own card. It's a MasterCard, and I think that Visa will be coming in along in a little while as well. As well as that, we introduced Biz Towers. We're going into the real estate market, building high quality luxury apartments in the big areas of the world that are growing. So when you actually buy one, within a number of years, the price of that investment will have increased dramatically that you've made in that real estate property. Not only can you have your own holidays yourself in some of the beautiful areas of the world, and we're starting first of all in Istanbul, which is the biggest growing city pretty much in the world. And you'll see that real estate will double in a couple of years. So we're in the right places. Your children can go there on holidays, and you're going to have, something which is going to grow in time. So you can see we brought forward some tremendous items in the Istanbul event. It's that good. Okay, so we're starting to increase in numbers very, very quickly. We're still having more people coming in, so I'll just wait a couple of minutes, but we'll only wait another 3 minutes, and then away we go. It's great to see so much positive feedback coming from the event as well, Heidi. I'm sure you've had loads. I've certainly had loads. Co-founders have had loads. My God, it really fired people up tremendously.
Absolutely. Yes, definitely. My last 2 days have been absolutely crazy. I've been at home, quarantine at home, and non-stop. It's absolutely been non-stop. It's like, I remember when on the 7th of March when BizCon was first launched, and it's the same things happening again. The momentum's absolutely amazing. Teams are going out there, talking to people, informing them about those people who were there in Turkey, informing them about the experience. And a lot of people are beginning to understand and want to know more about what we do. And that's the way forward. People need to know about what we do. People need to know about the history that BizTrade, BizCoin have created, and what the future vision is, because it will help every single person around the world, especially during these difficult times. People want to know how they can make money from home. And we have a phenomenal system, and that shows you how you can have financial freedom sitting from your bedroom or your front room or your kitchen.
Yeah, it's incredible.
Yes.
Okay, I think there's a few more coming in, but I think we'll just swap over to the screen for a moment so I can get everything ready to go. If you can just let me know, Hader, that you can see my screen and hear me clearly.
I can see your screen. I can hear you perfectly clear.
Great. So we've got everything we need to make a start then.
Yes. Over to you, Paul.
Thank you very, very much. Let's just get this. We are recording, so we're okay. I'm just going to record as well separately on Camtasia. Well, good evening, everyone. This is a training module 3. Now, we've done the first 2 training modules. Just giving you an understanding, first of all, in the first training module of what the Forex market actually is, you know, what it's made up of, how does it work? And then the second training module, where we started to look at a number of areas, and I'll go through those in a minute. So in training module 3, we're going to have a quick look at a review of what we learned in training module 2. Then we're going to look at what a lot is. Now, we introduced you to pips yesterday. Well, I'm going to introduce you to a few other things again. And the first thing and the major item is going to be something called a lot. And then we're going to look at Forex lingo. So when you talk to people, they think that you're a Forex expert already, because we'll give you some of those keywords that we use within Forex. And then types of orders. Well, I've taken you down a little route because I've taught you, first of all, about the Forex market, what it is, how big it is, how people make money from it. And then yesterday, if we look at a module 2 review, we looked at currency pairs. You now know that there are 2 currencies which make a pair, and those pair are traded. And you know that the first currency on that pair is going to be a base currency, and you know the other one is going to be a quote. Now, if one of those weakens, so it doesn't matter whether it's the base currency or the quote currency, then the market is going to move. And of course, we need the market to move because a station is just like a surfer, yeah? I don't think a surfer would do very well on a mill pond, would they? Yeah, so just like us, to be able to make money, we need that market to move. So therefore, either the base or the quote currency needs to strengthen or weaken. Now, if, for instance, the base currency strengthens, you learned yesterday that if the first currency on that currency pair strengthens, the market's going to go up. If the first currency on that currency pair weakens, market's going to go down. And it's also vice versa if you want to sell. So for instance, if the base currency weakens, the market goes down. Yeah, if the base currency strengthens, the market goes up, and the same for the quote. They do the opposite. Now, what this means is a market can move. If a market can move, we have a chance of making a profit. Just like a horse race, you can bet on a horse, but if it stays in the stalls, you're not going to win any money, are you? So this is the same thing with Forex. If one of those currencies doesn't do something, and currencies are always doing something, some news is coming out, markets are being pushed one way or the other for certain reasons, by greed normally, but we have a chance to make a profit. Now, I told you yesterday that the profit is made from 2 things. It's the distance multiplied by the amount of money you put on it. Now, we learned about the distance yesterday, didn't we? We learned it's pips, and the market moves a certain number of pips. Now, you saw how you worked out a pip we even went into MetaTrader, and you saw how that market moved and how many pips it moved as an example. So what we're going to do today is we're going to do the next part of the equation, which is the amount of money you put on it. So let's have a little look at that. And then right at the end, you can have a bit of fun. I'm going to give you a chance to be able to, tomorrow, download a demo account, actually a MetaTrader, and you can go in and place some trades yourself. It's a demo account. Yeah, it's a demo account. So go in and actually place some trades, see how it works. And we're going to give you two videos that actually teach you how to use it and run it. And you're going to do a demo account and actually start practicing placing some trades yourself for the next couple of weeks. What we want to do is get that into you, so you say to yourself, I like this. I like what I've learned. I've had a bit of fun on the demo account. Now let's go to Bizzcareer, because Bizzcareer provides you the last bit, and that is which direction I should trade in. Yeah, I've taught you about trading. I'll have taught you a bit about the money and how it moves. But of course, you've got to put your money on the right horse, and Bizzcareer teaches you to do that. So let's have a little look at what a lot is. Now, from the last module, okay, you learned the measurement of movement, which is a pip. But that is only one half of the equation. When you go to the grocery store and want to buy an egg, you know that you just can't buy a single egg. They come in dozens, yeah, or lots of 12, or lots of 6. Now in Forex, a lot is something called 100,000 units of a currency. So in other words, if you put one lot onto the market as the amount of money that you're putting on, what you're actually doing is buying 100,000 of whatever that currency is, the base currency. So if you put one lot for the market to move up, what you're actually doing is buying 100,000 of a euro. Okay, 100,000 euros. Now, but to understand this, you need to know about something called margin and leverage. I'm going to teach you the most simplest way of understanding what they are. But then, if you understand what a lot is and margin and leverage, you would understand how a trading account works. So let's have a little look, first of all, at margin. Now then, what margin does is lets you open large position sizes using only a fraction of the capital you would normally need. This is how, for instance, you're able to open, say, a 50,000 position with as little as $25 or $1,000 actually in your account. So how, with $1,000 in my account, can I possibly trade 50,000 euro against the US dollar? Now then, that is one of the biggest reasons that Forex is so popular. With a small amount of money, you can actually control an enormous amount of money. But you say, well, I don't have enough money to buy 100,000 users. How can I still trade? Well, this is something called leverage. Now then, what leverage does is it magnifies the amount of money that you have in your account. So when you trade with leverage, you wouldn't need to pay, say, 10,000 euros up front or 100,000 euros up front. Instead, you put down a small deposit called a margin. And then leverage is a ratio. It magnifies that position to actual trading capital. For an example, now then, 51 to leverage. That means, for instance, $2,000 of margin is required to open a $100,000 trade. Just like, so 50 to 1 leverage, if you've got $1,000 in your account, you have the ability to trade 50,000 euro against the US dollar, for instance. That is what you call leverage. And it is based on something, as I said, called margin as well. So they both go together. Leverage and margin, both are hand in hand. Now, if you believe the signals in the market are indicating that the British pound will go up against the US dollar. So say you open one standard lot of GBP USD. So you're buying the British pound with, say, 2% of your margin. Okay, so only 2%. And you wait for the exchange rate to climb. The GBP goes up. Now, when you buy one lot of GBP, okay, what you're actually buying is £100,000, which is worth around $150,000, okay? Now, since the margin was 2%, then you only require $3,000 to be able to place such a huge amount in your trading account, because it's 150,000 times 2%, which is £3,000. So now you're controlling £100,000 with just $3,000. That is why the Forex trading is so well sought after, because, of course, if you can magnify your amount of money, it means that the amount of money that you can win is enormous compared to the amount of money you have in your account. But of course, you can also lose a lot. And what we do in Bizzcareer is we teach you how to use your account properly so that it's always safe. If you put too much money on, then you're over leveraging. It's called over leveraging, and you don't want to do that. And in Bizzcareer, we teach you all about money management. So I'm going to give you a trading example in a little while, and we're actually going to place some trades. Okay, we're actually going to place some trades now into the market. Now then, as I said, using Forex account, which has high leverage, and you're using the margin, it's a great servant, but it also can be a cruel master. Now we know that, and as I said to you right at the beginning, was it 70, 80, 90% of all people who trade Forex lose money. Now, one of the biggest reasons is because they don't understand money management and they don't understand leverage and margin. You get taught that within Bizzcareer, so you know exactly how much to put on, and you know that you are safe as houses when you place a trade. So some Forex lingo. Let's do a little bit of lingo, is it? So let's have a look. If we look around money and money management, so you've got the lingo which I've started to teach you. Now, in any new skills that you learn, you need to learn the lingo. And now here are some terms that you can impress anybody with, actually. When you start using this, I can assure you, you can impress anyone. I can see Yvette starting to smile. Yvette, your friends are going to think you're a financial whiz kid when you use some of these. Now, you know about major and minor currencies, yeah? Now, the 8 most frequently used and traded currencies I told you were USD, Euro, Japanese yen, the pound, the Swiss franc, and then the 3 commodity ones, which are CAD, New Zealand, and Aussie. Now, these are basically called the majors, yeah? And really, they're the most liquid and the most sexy ones that you can get. That's what everybody loves talking about. And that's what people trade. Just one moment. That's better. I'm sorry, everybody. I've lost my screens. I just lost my screen. Sorry about that. For some reason, all of my screens went dead. There we go. I apologize for that. I'll edit that out of the recording. I promise you. We'll pretend that didn't happen, okay? Okay, so we've talked about the major and minor currencies. The next one, the base and the quote. Now, you now know that the base currency is the first currency in any pair. And the quote currency shows how much base currency is worth compared to that second currency. For instance, the USD Swiss franc. If the exchange rate is 1.6350, then therefore $1 is worth 1.6350 Swiss francs.
Paul?
Yes?
Can't see the full screen.
Oh, one sec. It's knocked me out of share as well. How's that?
No.
No.
If you want to stop the share.
Yeah, I'll have to stop the share and start again.
Yeah.
Okay, let's do it again. Share screen. It was like we had like a loss of electricity because I just lost all the screens. They all went black. What about that?
That's much better. We're back on.
Okay, let's try it again then, everyone. One moment. Okay, so if we look at I think you lost this. So if we look at the base currency, then you know the base currency is the first currency in any pair. The currency quoted shows how much of base currency is worth against a second currency. As an example, if the USD Swiss franc rate equals 1.6350, then $1 is worth 1.6350 Swiss franc. Now, in the Forex market, the US dollar is normally considered the base currency for quotes, meaning the quotes are always expressed in $1 per the currency quoted in the pair. Now, the primary exception to this rule is the British pound, the euro, the Aussie, and New Zealand, because in those currency pairs, they're before the US dollar. The US dollar is the second one. Now, we also learned about our pip and pipettes. Now, the pip is the smallest unit of any currency. Nearly all currency pairs consist of 5 significant digits, And most pairs have the decimal point immediately after the first digit. For instance, in Euro USD, you know it's, say, for instance, 1.2538. Therefore, a single pip equals the smallest change in the fourth decimal place. Now, there are some notable exceptions, and these are Japanese yen. I'm not going into Japanese yen because the Japanese spoil it, because they do something totally different, and I'm not going to confuse you here. Now, the pipette, that's 1/10 of a pip. Some brokers quote fractional pips. In fact, most brokers now quote fractional pips. The thing is, MetaQuotes, who do the trading platform, never decided to change everything in the platform to make it a pip. They didn't say 18.2 pips, it says 182. So now we got 5 decimal place brokers. Whenever you go on to a MetaTrader, which is the biggest, most used platform in the world, they haven't bothered to change it to tenths of a pip. So everything is, you have to look at everything as a tenth of a pip, whatever is shown. So it's a little confusing, and I wish they hadn't done that, but there you go. And you've also looked at the bid and ask price, yeah? These are the two prices that when you place a buy or sell, you either get given the bid or you get given the ask price. And all it does is put you a little bit behind where the market actually is, because that's how the broker makes their money. And that is called the spread. So let's have a look at spread and transaction costs. Now, transaction cost, basically the difference between your bid and ask is the cost that the broker charges you. Say it's 2 pips. Yeah, it's 2 pips. That's a norm. So therefore, you're going to be charged 2 pips when you place the trade. Now, I've explained to you a lot, but what I haven't explained is how much a lot actually is. Basically, a lot is $10 per point. So if you put 1 lot on to any currency, it basically works out as $10 per point. So therefore, if we put 0.1 lots on, it's $1 a point. If we put a trade on, and we're going to put them on now, if I put a trade on and I put 0.01, it's 10 cents a point. Now, if we were trading at 0.1 lots, that means it's $1 a point. If the market goes up 100 points, you would win $100. Yes, so this is the second part of the equation. Pips times lots equals profit. So if a market moves 100 pips and you put 1 lot on it, you'd make $1,000. Everything is ratioed in dollars in the Forex market. If you put 0.1 lots on as a trade and it went 100 pips, you'd make $100. So that's how the equation now works. So you now know what a lot is. Yeah, it's the currency of the Forex market, actually. Bit of a pun, but it is actually the currency of a Forex market. They're called lots, or part of a lot. Then we have the cross-current, margin and level, sorry. Then we have margin and we have leverage. Now then, when you open a margin account with a Forex broker, you deposit a certain amount of money into that broker. Now it varies, but most probably the minimum is $100, and the maximum can be as high as 100,000, a million. It doesn't make much difference. Now, each time you execute a new trade, a certain percentage of the account balance is taken from you. Basically, what you do, you can never use all the money that you have in your account to place a trade. Every time you place a trade, the broker takes a little percentage of the money that you've got and puts it in a little pot for you, which means the more trades you put on, the more money they take. So they're trying to make you trade safely, because they're not allowing you the full amount of money in your account to trade with. And the more trades you put on, the more margin they take. But it's like an insurance company. But they give you the money back. When you close that trade, you get the money back into your account. Whether it's a winning trade or a losing trade, you get that money back. They don't take it. They sort of just not let you use it. And that's what margin is. And that's why it's called a margined account. Now, leverage. You've already heard that, and you know what leverage is. It means that whatever amount of money that you have in your account is magnified by whatever leverage the broker gives you. So therefore, if a broker gives you a 100-to-1 leverage account, which is normal, then if you had £1,000, that allows you to buy £100,000 worth in the market as a trade. You couldn't put another trade on because you'd margin out, to take all your margin away, but you could actually place that size trade. Now, we don't teach you to do that, because if the market moved a couple of pips, you'd lose it all. So we teach you how to trade properly and use leverage and margin, not as a cruel master, but as a great slave to make money, good money. Now then, order types. You now know about the Forex markets. You now know what different things are called. You also know that if the market moves a certain distance, it's in pips. And to make money, you put a certain amount of money on it. Now, you now know what that currency is. You now know it's a lot. You know that if you put 0.1 lots on to a trade, it's approximately $1 per pip of movement. But now we've got to make that trade. So what types of trades do you make? You know, how do you actually do it? This big myth. It's simple, I can assure you. There's a lot of myths around Forex because people who make the money like to keep the money, and everybody else, they don't like to think that it's something easy. But actually trading Forex, when you know the fundamentals, when you've been taught properly, is a great way of making money. But how do you actually place that trade? Well, what I'm going to do first of all is explain to you the different types of trades, and then we'll go and do it live on the market to show you how easy it is. Now, a market order is actually, I'm placing a trade. A lot of you must probably know Betfair. Yeah, you place a bet on a horse to win, or your football team. You want Man United to beat Man City. You say, I want to put £5 on it. You press a button and your bet has gone in. A market order is exactly the same as that. As soon as you press a button, it's live in the market and you're either making a profit or you're losing. But there are something called pending orders, and there's 4 pending orders. I'm not going to go into great detail about them, but I just want you to know that there's different types of orders. Now, these orders are executed not when you press the button. Okay, so market orders are executed immediately you press a button, but pending orders execute at a certain time, because say the market has been coming down to a certain level all the time and never broke it. You may want to put an order below the market. So if it does break it, because when a market normally breaks a previous support, if it keeps bouncing off, boy, does it go. So you may want to say, right, I'm going to place a pending order in the market. I can leave it. I can go and do my shopping. I can go to work. I'm going to put it there waiting just in case that market breaks below. And hey, presto, it automatically then starts. So a pending order is a position that you put into the market that when the market gets to that point, it actions and it becomes a live trade. So these are the different types of pending order. I'm not going to go into it in detail. All I want to do is show you an example of what I mean. If you see the green line, okay, that is where you want the order to take place. And this is something called a buy stop. So this is an order. The market is down at the blue dot. Okay, the market's down here at the moment. And what you're saying is, I don't want to get in there because I think it's going to bounce down soon. But if it breaks and the market shoots up, then I want to get in at a higher level. So what you do is you place something called a pending order and a buy stop in this position. And if the market goes down for the rest of the day and bounces off, then that order won't trigger and you can cancel it, and there's no loss, there's no profit. But if it does trigger and the market flies up, you're in a trade. And we have some of our strategies in Bizzcareer that you do not need to be watching the market all the time. You place your traps and you walk away and you look at it at the end of the day to see what it's done. I'm not going to go through the others. I just want to explain that you have something where you're looking for a different position that you want to get in. And that can obviously, a sell stop is if you're up here and you want to go into the market lower than where the market is at the moment. And the limits are basically something where you want the market to drop a bit more to this level. You don't want to get in here. You want the market to drop, say, to a support level, and it's going to bounce off. So you want that trade to come down here. So the market on the limits has to come down or come up to a certain point and then action before it goes. So let me show you what we're going to do now. Before we do demo, I'm going to show you on a MetaTrader, and we're going to place some trades. Ah, look, I'm so good. Here's a trade I placed there. This is like Blue Peter. For those in the UK, you know what I mean. This is one I did earlier, okay? I placed this trade a little bit earlier because I thought the market was going to go up. Do you remember what I said to you yesterday? Often with markets, what goes down has got to come back. And I placed a trade earlier on. I put, let's have a look, at 8:54. So MetaTrader is 2 hours difference. So 6:54, okay, this evening, a couple of hours ago, I placed a buy. I did 0.1 lot. So I put $1 a point on. And this market has almost hit my take profit. Look, I put a take profit up here. We're £11.99 in profit. Let's take it. Thank you very much. $11.99 in the bank. I didn't expect that to happen, but that's what you get sometimes when things go so well. Now then, you saw yesterday this was the market, yeah? Let me show you a market trade. Okay, so straight in, not a pending order, a straight in. So we go new order. And the box comes up. As I say, let's wipe away these myths that this is difficult to do. Now, we teach you how much to put on. All right, so you've worked out and you've got a calculator within Bizzcareer that tells you how much to put on. All right, and it says 0.15 lots. And you're going to do a direct market order and it says sell. So you click sell. Bang, it's in. That is placing an order in the market. That's how simple it is. So now a signal on Bizzcareer said sell, and you know that you've got to put 0.15 lots on. So you're in about $1.50 a pip. Now, if this goes down, and you can say, I want a 30 pip stop loss. So you grab the line and you take the stop loss up because we're in a sell. Stop loss is always above. I want to take it to 20 pips. If you look on the left-hand side, you can see that that would be minus £23 if we lost. And that's at 201 pips, which is 20.1 pips. And I'm going to make a take profit. Let's just drag it. And my strategy says that it's going to go down to this level. Bang. You just leave it. Now, if the market comes down here, it takes profit automatically. That is a market order. It's not difficult, is it? That is how you place a market order. And you can see that there's a little bit of commission. Yeah, the spread that we've taken. Yeah, this 75 pence has been taken straight away because that's how the broker makes their money. But you can see that you've put a sell on at 0.15 lots. So $1.50 a pip. You've put it on Euro USD. This was the price. There's a stop loss. There's a take profit. And this is the current price as is at. That's the spread. That's what you've paid to the broker to take it. And you just let that run. Now then, let me close that for a second. A pending order. Now I said to you, let's just take, say, something simple, just one item, a sell stop. Now a sell stop means that I want this market's come all the way down here today. And the reason that market is coming all the way down in the Euro US dollar is very clear. I don't know if you're aware on the news, but I think France and Germany have gone into a second lockdown, a full country second lockdown. Germany is the powerhouse of the European Union. What's happened? The market's come down. Yeah, the euro has weakened. But we're expecting worse because we're expecting a few more countries tomorrow to go into lockdown as well. So what I'm going to do is I'm going to just draw a line by here and say that if the market comes below this low, I want to put a sell order in because it's going to go down even further. So let's have a quick look at how you'd put a pending order on. So this time we've got, let me just have a quick look where it is. We want to put a pending order on 1.16449 as a sell. So I go new order. And again, this time my calculator has told me that I got to put 0.12 lots on. And what I'm going to do is I'm going to say this time I would like to put a pending order on. And I want to put a sell stop. Now, you learn about all of these in the course, okay? But I'm just showing you that it's not that difficult. You know, it's a couple of things you need to learn. And the price, what did we say? 1.6443. 1.6. Let's take it down. 70, 60, 50, 40. 1.64. Let's just get it on there. 4, 3. There we go. So I'm going to put in there, and you can also say, well, actually, I want my stop loss to be up here and my take profit to be down here. So you will learn to do that, but I'm going to put my stop loss at 1.692. So you put your stop loss. Let's just get close, and I'm going to get my take profit. I'm going to take, I don't know, 50 pips profit or something. So I'm going to take this down here. 44, let's take it down now. That's about 50 pips profit, and you place your trade. There it is. Now then, the market now needs to come down here. Okay, the market, if the market comes down here, you can be in bed, it doesn't matter. You can be out shopping, you can be taking the kids to school. It'll trigger itself. And if it breaks this, there's a good expectation the market will come down. And when it comes down to here, it takes your profit for you. But those are pending orders. Now, this isn't difficult to do. The myths around trading and how you do this, that, and the other. Oh my God, it's simple, really. But that is how you place trades. Now, what we're going to do tomorrow is we're going to give you a link that you can download one of these MetaTraders free of charge. We'll give you free $10,000 in it. Okay, or pretend money. And you can start learning how to do it, because we're also going to send a link out for 2 videos which will teach you how to use MetaTrader. So you're getting, you know, a lot of benefit from this course. It's a free course, but you've learned enough already, a lot already. You're going to learn more tomorrow, and you're also going to get one of these to play with, and then you can start to see and hopefully get the bug. And when you get the bug, then hopefully you can join Bizzcareer and start making real money. So there we go, everybody. So the demo trading. Now then, you've seen me just demonstrating this on a chart. You've seen how I've just made £11.90 by putting a tiny amount of money on. And you've also can try this, as I said, free of charge. Our broker is an amazing broker. They're an institutional broker. So when you actually join Bizzcareer, you don't get a retail account which charges you £2 or £3 per point to place a trade. It's going to cost you less than £1, normally 4 times less, okay, to place a trade, and you get the fastest execution. And you're going to get a demo account from that company free of charge. Now, they'll supply you with a demo account for 1 month, and then you can delve in and you can start learning how to place trades yourself. You've just seen how I do it, and I teach you on these 2 videos that you're going to get. Also, do it yourself. Try placing some trades. Now, you don't know which direction to go, but learn how to place a trade. You can say, I can place trades in the market. Yeah, just learn how it works. And also, we have a little special offer, obviously, in the next session as well. So we're going to give you just a little something to go away with. And also, you'll be given this link to get the 10,000 plus the demo account with the 10,000 in tomorrow's training session. And that is training session 2. Sorry, module 3. Thank you very much, everybody. Let me just clear everything up. There you go. So I hope you've learned a little bit more tonight, just a little bit more of the picture. You know, you've learned, you know, how to place a trade. You've learned what the money is. And you can see how, what leverage is. You know what leverage is in an account now. If you get a leverage of 100 to 1 and you put 1,000 in, you know, you can place trades of 100,000 into the market. You won't last long like that, but you can place trades up to 100,000. But what it means is we teach you how to use leverage to be your slave rather than it biting you in the backside. Let's put it that way. So thank you very much, everybody, for coming on tonight. We're going to do another session tomorrow. You're going to learn a little bit more. But what we're also going to do is show you how to download the demo account, how to sign in, and then you can get that yourself. We'll give you the link and a free $10,000 to play with, and you can lose it all. It doesn't matter. You can win 10,000. If you win 10,000, tell me, because I want you as a Bizzcareer member immediately, okay? And make some money for this company and yourself. There you go. Hi.